one of the wildest market stories of the year, the incredible, just explosive rally in silver. What in the world is driving it? And, more importantly, is it about to come crashing down?
I mean, just look at that number. Prices have absolutely skyrocketed this year, surging over 150%. Now, a move this big, this fast, it's left everyone from seasoned traders to everyday investors asking one really critical question.
So what's the deal here? Is this massive rally built on the solid ground of real-world supply and demand? Or is this all just speculative hype, creating a giant bubble that's, just waiting to pop? Let's break it all down.
Okay, so here's the game plan. We'll start with the shockwave itself, just how big this move has been. Then we'll get into the two competing theories, the case for a genuine supply squeeze, and then the very real warning signs of a bubble. And finally, we'll look at what could be coming next.
To put it bluntly, the price action we've seen in 2025 has been nothing short of historic. Silver hasn't just rallied. It has completely shattered multi-year resistance levels, blasting past $75 an ounce. But the real story here is why. This isn't just about market mood swings. We're talking about some powerful, physical forces at play.
All right, so first, let's unpack the argument that this rally is based on something very real. A genuine supply squeeze, all driven by what we're going to call industrial silver.
You see, this is what makes silver so different from gold. Unlike its famous cousin, which is mostly for jewelry and just sitting in vaults, over half of all silver actually gets used up by industry. It gets consumed, it's gone, not just stored away. And this industrial hunger is creating a huge problem. For years now, the world has been using more silver than it produces, leading to these massive deficits. And you can see it in the data. Stockpiles in the big vaults are just steadily dropping. And we can't just flip a switch and get more. New mines can take a decade to build, and get this, most silver isn't even mined on purpose. It's just a byproduct of mining for other metals. And here is the absolute kicker. In so many of the world's most critical technologies, we're talking solar panels, electric vehicles, all of our electronics, there's just no good replacement for silver. It's essential. You can't just swap it out for something else. So on top of all that fundamental pressure, we're now hearing reports that China, a huge player in the silver market, might actually introduce export restrictions. I mean, can you imagine? If that happens, it could squeeze the global market even harder, just throwing gasoline on an already raging fire. But hold on. That's only half the story. The physical market is tight, no question about it, but the financial market, well, it tells a very different and maybe a much more dangerous story. So let's flip over to the other side of the market and look at the case for a speculative bubble driven by so-called paper silver.
And to really get a feel for the risk here, we don't even need a hypothetical. We have a dramatic, real-world example that just blew up this week in China.
I mean, check this out. China's only pure-play silver fund, the UBS SDIC fund, saw its value skyrocket an insane 220% this year. That absolutely dwarfs the already massive rally in the metal itself. The whole thing got so crazy, so fast, that the fund's own manager started getting nervous. They actually had to issue multiple public warnings, basically screaming at investors that the gains were completely unsustainable and totally disconnected from reality. And then, on Christmas Day, it happened. The bubble popped. The fund crashed a full 10%, immediately hitting its limit-down trading halt for the day. So, what exactly went wrong here? This is where the danger just becomes crystal clear. At the start of the month, the fund was trading just 7% above the actual value of the silver it held. Okay, a small premium. But as the mania took hold, that premium exploded to a staggering 62%. The fund's price had become completely unhinged from the value of the asset it was supposed to track. It was a classic speculative bubble. So, where does that leave us? On one hand, you have a physical market that is screaming squeeze, with real, tangible demand and shrinking supply. And on the other hand, you have a financial market showing all the classic signs of dangerous, speculative excess. So you've basically got these two different versions of silver in a total tug of war. You've got the fundamental story for industrial silver being used in factories, which looks really strong for the long term. And that's clashing with the frenzied emotional demand for paper silver being traded by speculators, which is all about short-term sentiment and volatility. And the pros are seeing this too. Analysts like Justin Coe at VT Market are quick to point out that this rally isn't just hype, it really is grounded in real demand. But, and this is a big but, they also warn that silver is notoriously volatile, and after a run this steep, sharp pullbacks aren't just possible, they're probably likely. Look at this forecast from that same analyst.
a potential trading range for 2026 all the way from $48 back down to retesting that $75 peak. The key takeaway here isn't a specific number, it's the massive size of the range itself. That tells you the most probable outcome is just intense, teeth-grinding volatility.
So what's the bottom line? Well, if you really want to understand where silver is headed, you just can't look at one side of this story. You've got to watch both the factories building solar panels and the financial funds trading futures. The real direction is going to come from that tug-of-war between the two.
And really, that's the central conflict that's going to define the next chapter for silver. Is its future value going to be forged by the relentless, real-world demand of industry, or is it going to get broken by the volatile and, let's be honest, often irrational whims of speculation? That is the billion-dollar question that will decide whether this historic rally has real legs or if it's all just standing on very, very thin air.